All right, guys, weekend's over, holidays behind us. Hope you guys had a fantastic, restful Labor Day weekend, but it's time to get back to work, right? First full week of September. It's Tuesday evening. We're getting ready for Wednesday's trading session. Got a bunch of ranges on the charts. I love range bound markets. We have a lot of great trades setting up for Wednesday. I'm going to cover all my favorite trades in tonight's video. That way you get a game plan to make some money tomorrow. Before we jump in, though, and get this party going tonight, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video upload. And as always, if you guys enjoy the video, do me a favor, will you? Hit that like button for me. Appreciate you guys supporting this YouTube channel. But enough of the intro, right? Wednesday is not going to trade itself. Where is the low-hanging fruit? Where's the low-risk, high-reward, money-making 10x trades coming at us on Wednesday's trading session? As I mentioned before, I got a lot of ranges on the charts here tonight. Range on the Nasdaq, range on the S&P, range on crude oil. Everything is bearish right now. And of course, I would love to get some breakouts going lower. Got to be careful, though. Got to be careful on those breakouts. You'll notice we have major areas of support, multiple areas of support just below those trading ranges. Guys, there could easily be some head fakes, some fake out breakouts for those buyers here for tomorrow as well. So we're looking for breakouts going lower. But I've got my eyes on some fake out breakouts, some head fake breakouts, right? Some trap and go breakouts for the rally back higher. And of course, speaking of rally back higher, lots of open space here for the bulls to make a breakout going higher. So there's definitely no shortage of, again, breakouts going lower, but I got my eyes on some long side trades too, because again, I wouldn't be surprised if we have some traps down here, some bear traps and some fake out breakouts going lower. Not to worry, I'm going to cover all the entry setups in this video tonight. Before we jump in though and get into each individual chart here tonight on this video, let's make sure we're all getting the same page for tomorrow. Tomorrow is a Wednesday. It's going to feel like a Tuesday. Obviously, Monday was a holiday. Tomorrow is really all about the Fed. It's all about Fed speakers. You can see we got Barkin, we got Mester, we got Brainerd, and we got Bard. And of course, on top of that, kind of the cherry on top tomorrow is that beige book at 2 o'clock Eastern time. So we have no shortage of catalysts for tomorrow, right? Fed speakers. Now, why is the Fed important right now? Well, because everyone's obsessed with inflation, right? We're wondering right now what the Fed will do to combat inflation going forward. And the Fed has made it very clear to us that no matter how deep this recession gets, they will not let up in raising rates. And so we're looking in for more clues out of them tomorrow, potentially something that might surprise these markets for tomorrow. We're also watching a lot of other stuff this week. You know, we heard last week about stimulus, right? Lots of new stimulus coming into the markets right now. We heard from President Biden here in the U.S. about a student loan, don't call it a bailout, right? Student loan forgiveness, which is basically a stimulus package. We heard from Europe over the weekend talking about throwing trillions of dollars into stimulus to lock down rent payments, lock down energy costs to get through the energy crisis that Russia seems to be enjoying at this point. And then we heard from China over the weekend. China just locked down 20 million more people with their zero COVID policy. They're talking about new fiscal stimulus, right, to get their economy going again. It does seem a bit crazy to be talking stimulus when inflation's out of control right now, but hey, that's the world we're in right now. Lots of stimulus hitting the markets here the next couple days. Will the buyers love the idea of free money, easy money coming back into the markets? We're going to find out. We're very bearish right now, obviously, and we definitely felt that today. But tomorrow, Fed speakers on our radar tomorrow. Will we hear anything more about student loan bailouts, energy stimulus in Europe, Chinese stimulus, right, after lockdowns? Those are some of the things that we are watching closely over the next couple days. We've got Powell coming in on Thursday, and we get a bunch more meetings this week here. Everything's talking about stimulus right now. So I'm interested to see how the markets will react to that tomorrow, if at all. Back to our charts though here tonight. The money is on the charts, and we've got plenty to work with without any fresh headlines here tomorrow. Now guys, whether you trade one of these markets or you trade all of these markets, make sure you watch the entire video here tonight. You'll learn something new throughout each step of this video lesson, I'll provide different trade ideas, different advanced tactics, and I try to save all the best stuff towards the end. So I'll give you a reason there to stick around all the way to the end of this video. Let's go to the NASDAQ first. We'll go NASDAQ, Emini, and then of course wrap things up on the crude oil tonight. This is a 4,000 tick chart on the NASDAQ or the QQQs. Keep in mind, a lot of this stuff I talk about on the NASDAQ can be applied to the S&P. The S&P can be applied to the NASDAQ. They are, really all three of these charts are very, very similar. So be aware of that. I'll try not to repeat myself too much as we go through. There are 4 key insights telling me where the best trades are likely going to be for tomorrow. First of all, we definitely have a bear bias across all 3 of these markets here right now. Look at a daily chart, look at a 4-hour chart, look at a 60-minute chart. It's pretty easy to see markets are overall bearish. That tells me that if I only had one trade tomorrow, it would probably be better to be a short side trade until something changes. And we'll talk about what that something might be. Second big clue here is that strong move down that we saw between 9 o'clock and 10 o'clock this morning. Why is a strong move important? Well, because anytime we see a strong move in one direction, we know the sellers are looking to retest that low. At that point, do we see a bounce off of that low back up to overhead resistance, major highs overhead, or do we see a breakout going lower? As I mentioned earlier, I do have quite a few breakout patterns on my radar here as well. So strong move lower says be aware the sellers are on a hunt to retest that 930 level on the NASDAQ, and you'll see similar levels here on the S&P and the crude oil, right? Third clue here is a trading range. Why is a range a big clue? Because ranges are magnets. As the market goes lower, unless we can get a significant breakout, it's going to want to go back up into that trading range. Hence why I said earlier, there could be some bear traps down here. There could be some fake out breakouts below these lows here that may really catch a lot of the bears off guard here. At the same time, too, as we go higher here, we have to think that bears will be coming in and trying to sell back down into that trading range. Bears coming in and trying to sell back down into that trading range. Ranges act like magnets. And then what might really be the biggest clue I see on this chart right now really has nothing to do with today's price action, but it's really what happened compared to yesterday's, and that is the prior lows. Now, you will see this consistently across all 3 of these charts tonight. You'll notice we are literally sitting right at some significant lows from late last week. That was Thursday's big move down, and I'll tell you, I find it very, very convenient here how they made that strong move down in the pre-market, but yet as they close up shop for the day today, they can't quite keep us underneath that low. To me, that opens the door wide up for a move back up to take up some of these highs. 12,240 area on the NASDAQ. You'll see similar levels on the crude oil and the S&P. It also, of course, tells me that if we can't, right, if we want to go lower, we're going to have to see some real strong proof with that breakout going lower. I think those prior lows are just begging to be rejected and for a spike back higher. But let's play the odds on this one, though. Right now, we're bearish overall. I would like to get some breakouts going lower, but here's the challenge we run into on this NASDAQ with a range above us sitting right at major lows with plenty of support levels below us. The key going lower is going to be getting a very strong breakout. If we don't see a real strong breakout, there's a very good chance we end up getting a fake out breakout and running back up into that trading range and probably taking out some of these levels up overhead. So what does a strong breakout look like in my eyes? Well, there are 3 basic types of breakout patterns I'll be looking for here tomorrow. The first one is called a 1-2-3 breakout. It's a very simple breakout pattern. It begins with a relatively strong breakout of the range. But then the bears have to come in and they have to hold the pullback and really jump off the moving average. Now, once we get those 1, 2, 3 moves, once we get those 1, 2, 3 breakouts going lower, what I'll do is with all that strength going low, remember, anytime we see a strong move in one direction, we expect a retest of that low. So I can mark off that low. I can mark off that high. What I always do is drill down, find some prior swings, and look for things like traps, above prior swings, buyer failures off the moving average, pullback combinations, all the same entry patterns you guys have learned inside of our free trading classes, right? So trap, failure, pullback combo. Again, this needs to be a very strong move down, right? Strong move lower, hold that pullback, and really blast, right, off that moving average. Mark that low, mark that channel high, find some of those prior swings, and try to get that first test off the top of that channel. Could be a trap, failure, pullback combo, all the same entry setups we talk about in the free trading course. Keep in mind, too, on these 1, 2, 3 breakouts, the size of the first leg and the size of that third leg are usually very symmetrical. Now, we've got more levels waiting down here. I've got 11,709, 11,634. If the market really takes off the downside here, that's likely where these markets are going to go. But again, keep in mind that first leg and third leg are often very symmetrical. Here's one more for us. I got 3 breakout patterns going lower here. How about this one? How about a pop and a grind, right? The old pop and grind, one of my favorite channels right now. Now this one, we're going to pop lower and we're going to start to grind down. We're not going to pull back to the moving average and jump. We're going to pop and grind lower. In that situation, another strong move down for the bears. We should be seeing bears come in and try to retest that low. I'm going to mark off that low. I'm going to go back up and find a new channel overhead, right? See how I'm doing this? I'm going to look left, find some prior swings, and again, I'm looking for that first pullback off the high of that channel. And I say pullback. My favorite entries are traps above prior swings, failure patterns above the 21 moving average, and then pullback setups as we go lower. Again, think about that first leg and that third leg as we go lower. And I hate to repeat myself over and over again. Could be a trap, could be a failure, could be a pullback. All the same entry patterns you guys have all learned inside that free trading course. Which reminds me, I know that most of you guys and gals have taken the free trading classes. You've learned all the setups. I know you have because I get so many great emails every week about you guys making money with this stuff from the free classes on our website. But listen, if you're one of the few folks who haven't taken that free course yet, what I'll do is I'll put a link for you here in the upper right-hand corner. If you're like me and you hate missing the best trades each day, grab that link, learn that strategy. The 3-step strategy I teach in that free class will teach you how to find more winning trades, help you avoid those costly losses, and most importantly, the strategy I teach in that will give you a lot more confidence because you have a roadmap to go in and tackle whatever the market throws at you. That free course up there is perfect for someone trying to jump into full-time trading and make that switch into full-time trading. So grab that link I just popped up there, take that free course, learn that strategy, and let me know how you do with it. I'd love to hear about your success once you learn all those setups. Now, last breakout here as we go lower. I talked about the 1, 2, 3. I talked about the pop and grind. What's the next one? Let's say we get another one of these things, right? Let's say this market literally dumps overnight. Anytime we see a big move overnight, what you want to think about is it's going to be too low to sell down here. If we get a really big move down overnight, promise me you're not going to chase this thing going lower. What you want to do is you want to start thinking in terms of how can I find a bigger channel, drop the lows, up around that high, but most importantly, what you want to do is you want to wait for that nice deep pullback. How deep? Deep enough to get a good amount above the moving average. That way, you can wait for buyers to come in and try to buy this thing right back up. Once they buy it back up, you've got them right where you want them with that failure to go back down to retest the low. We see a lot of these breakouts where, we don't really get a 1, 2, 3 breakout. Those are pretty easy, right? Find that channel. We don't get a pop and grind breakout. It's just simply one huge move down overnight. When that happens, we don't want to chase it, right? Don't want to chase it. Wait for that nice deep pullback. How deep? How deep is deep enough? Right when it starts to feel like this thing might be reversing, going back up into that trading range. Remember, it's a strong move down. Anytime we see a strong move, we're trying to retest that low. So rope in those buyers, get the inexperienced buyers who fall for that trap them in, and sell right into those stop losses for a retest of the low. One of the easiest trades you're going to get, right? Strong move, big move overnight. Find those bigger channels, trap in those buyers above the moving average, right? And then run it back down to retest the low. So now we got a pretty good game plan here for trading those breakouts as we go lower. One thing I haven't talked about though yet is how do we buy it as it goes lower? I mentioned earlier, we're sitting right at major support. We get a lot of talk about stimulus right now. Who knows, right? We get some more stimulus headlines. The markets may love the idea of some easy money coming into the market. I want to be a buyer down here, but we're too bearish though, right? So what would be an easy way for me to buy this thing in an overall bear market? There are two basic sequences that you want to learn to buy at major support with a range above us. The first one is going to be a crown reversal. So as we go lower, look to trap in the bears. Now remember, we're at major support with a range above us. It's not proof yet of a breakout. We talked about those three breakout patterns a moment ago. At this point, when the bears come in and they try to get too aggressive, when they're not looking left and they don't see where we are in the big picture, if I can get these bears trying twice, I'm going to look for a trap entry below that low, and that's called a crown reversal. Okay, crown reversals are really simple. You want to make sure you combine them at a major turning point. You want to see signs of exhaustion, which uses the 2-try rule, 1 try, 2 try. And because we're so bearish, I want that trap low because I have to assume above these highs, there'll be more bears coming in to sell the market back down again. Keep an eye out for that crown reversal pattern going back up into that trading range. Again, if we don't see the strength of that breakout going lower. Here's another one to keep on your radar. We take out that low. The bears come in, they immediately jump in and they sell it right back down to retest the low. Is that a breakout yet? No, it has to keep going on strength to be a breakout. At this point, it's just bears selling a pullback and retesting that low. Nothing has changed. We're at major support with a range above us. At this point, now we rope in bears once, bears twice. Once they try twice, think about where all their stops are. Think about where all their pain is, and we are buying right into those stop losses. Now, when that happens, we now have the easy ability now to find a new channel across this high, bring it down to that low, and then repeat after me. First test is the best test. That's the one you want right there. Now, again, I'm keeping it simple right now. This could be a trap. It could be a failure. It could be a pullback. Again, we'll apply those same entry patterns, those same entry setups you guys have learned in that free class I keep mentioning in the upper right-hand corner. All right? So again, on this one, strong move down, not strong enough to be a breakout. We rope in those bears now. Remember, think about the sellers getting caught selling at support below that trading range. We're buying right into their stops. And then as the market turns in our favor, where does it want to go? It's going to want to take out some of these big highs, right? So we're now looking for entries going long. I'm going to find those pullbacks here now off the low of that channel. And again, I say pullback, right? It's traps, it's failures, it's pullback combinations, right, off the faster time frame tomorrow in our trade room. So now I think we've got a pretty good plan on this. If we go lower, we know how to sell it and we know how to buy it. Now the next question is, how do we buy it as we're going higher? And well, can I buy it going higher? Can I sell it going higher, right? Can I sell up here? Can I sell up here? Can I buy it as it goes higher? Let's talk about that on the S&P. The S&P, of course, is very similar here to the Nasdaq. Same 4 key insights, right? We're bearish, bear bias right now. We'd like to be a seller. We'll see what we can get out of this for tomorrow. We, of course, have a strong move lower. That strong move lower will want to retest that low. We have a trading range. Ranges, of course, act like magnets. And again, as I mentioned earlier, we have all of these levels of support here. That big move down that we saw last Thursday. And is it just a coincidence? It probably is not. It's probably not a coincidence that we're sitting literally right at that low. Why weren't we able to retest that low? Again, this might be nothing. This could be nothing at all. But with all the talk about stimulus and the range above us, it makes a lot of sense right now for this market to have some head fakes going lower here and possibly a run back higher. Now, again, we've talked about those 3 breakout patterns. It was the 1, 2, 3 breakout. It was the pop and grind breakout, and it was that big move down, wait for that deep pullback and retest. And we also talked about the crown reversal off of that low. We talked about the move down, the retest, the trap in the bears, right? We talked about this on the Nasdaq. That, of course, is all still within striking distance on the S&P. Okay, going higher now. How do we buy it? How do we sell it? Well, first of all, if we go higher here, there's plenty of reasons here to want to be a short seller because you've got, again, overall bear market resistance area overhead with a range underneath it. But here's the problem. We have a higher low off of that low, and that trend line is a really big obstacle for the bears right now because, again, the bears want to get where? The bears want to go back to retest the low. So the only way for me to safely sell off this high is to use ultimately the same pattern we saw back here. We go up, the buyers come back, they try once. They pull back, they try twice. Then, once we roll over, buyers once, buyers twice now, all those bears start piling on with that trap high to sell it back down to retest the low. That pattern right there is ultimately what you need to see up over here, right? So we pop up. Again, we know we have that rising support trend line. The buyers will come in, let them try once. Okay, pull back, try twice. That trap set up. Why trap? Why a trap? Because again, we have that rising support. Okay, we're bearish, but we know in all reality the buyers really want to get back up to retest that high overhead, right? That's kind of the big range from today. So really, this will be probably the least desirable area for sellers to sell short. So I have to be a little more careful, wait for those buyers to get trapped in, and then ultimately use their stops, right? That's all we're doing. We're using their stop losses as fuel. If you're stuck long, right, if you're buying this thing, trying to buy this thing going higher, and you're stuck long, your stop loss right here becomes a sell order. And therefore, it really increases our odds of success when we really need it the most, right? With that move going higher, trying to sell into it. That is one way to short this thing off the high. I would also imagine, too, as the market goes higher, if we were able to see a nice strong pop up, we'd be able to buy that pullback before we run into these highs and then look for that short back down again. We talked about this quite a bit last week, right? If I can get a strong enough move going higher, is a good chance I can buy that pullback for a retest of that high because, again, anytime we see a strong move in one direction, we're probably going to get a retest of that level. So if I can get a real strong pop going higher, I can probably buy that pullback. I can't get too greedy on this one, though, because once they retest the high, then because we have this overall bear bias we're looking at right now, we can look for that drop back down again. We talked a lot about this last week. I know a lot of you guys made some pretty good money on that type of setup last week as well, right? Last Friday, I should say, on that short squeeze. So as we go higher, what would be some ways I could buy this thing, right, going higher here? Well, I think the one I would like to see the most is a pop and grind. So we pop up, we start grinding higher. That grinding higher motion is very, very common for a pullback. So once we get that pop and grind, I can mark off that high. I can find that channel low. I'm going to drill down, find some of these prior swings, and try to get my trap entry, try to get my seller failure entry off of that channel low. And again, my goal is very simple. I want to go back and retest that high, right? I'm looking to buy off the low of that channel as long as I have, very important guys, as long as we have enough strength going higher to begin with. You need that strength because it's what's going to give us the ammunition we need to buy that pullback and get that retest. So keep your eyes on that right as well. Let's say, for example, we were to go all the way up here, pull back, right, to the moving average and really blast, right, and run higher. That's one of those 1, 2, 3 moves, right? Same idea, right? So now mark off that high, mark off that low, find those prior swings. That's usually where the best winners live. And we look to get below the moving average, get below prior swings. And again, same idea. I'm using traps and failure patterns to go back up and retest the high, right? Once I retest the high, then I can look for that short going back down from there. Okay, how do we sell that thing now, right? How do we sell it? Well, for example, let's say, we see a strong move up without a pullback. Okay, here's how to sell it off the highs here. Let's say the market now makes this very, very strong move higher, and we get another one of these patterns over here, right? We pull back, the buyers try once, the buyers try twice, they get that trap, nice juicy signal, right? And we're selling it back down again. That same pattern here can be used over here. So if we just simply rifle higher, you know what I mean? If we hear about, again, a lot of stimulus chatter right now. Market takes off to the upside, takes out that 3960 level here on the S&P. Same basic idea, though, on the Nasdaq as well. We pop up. We run right into resistance with a range overhead and an overall bear bias. At that point now, buyers come in, they try once. They pull back, they try twice. I want that trap, right, for that short, because again, the strength of this move going higher is going to tell me the buyers are going to put up a fight to go back up to retest the high. That's how you sell into a strong move into an area of resistance. Right? We don't just simply sell into it. We wait to trap in some of these buyers, use those, speaking of traps, use those trap entries for that run back down into that trading range. What is a lot more likely tomorrow is to get that strong run up, give us a chance here to buy that pullback, and then once we retest that high, right, like this, we go up, buying the pullback, they retest the high. Now, anytime we see a strong move and they retest, as we always say, mission accomplished. Now, there's not as much urgency now for the buyers. And this is where, as the moving average comes over now it's one try for the bulls, two try for the bulls. Remember, trap in those buyers and use their stop losses for your exit. Okay, sorry, for your entry, right? Use their exit for your entry. The most important thing is on this one, though. Once we double top that high or come close to double topping that high and we see this thing begin to fall apart and run lower, your job is not done yet. Now, mark off a new channel off that low. Mark a channel off that high, drill down, find that prior swing, grab that trap, grab that failure, grab that pullback combo, right? Makes sense? So now as we go higher, right, can we get that pullback, go back to retest the high, and then rope in those buyers? Remember, the smart money buyers, they're buying that pullback ahead of that retest. Once we retest the high, these are all the inexperienced traders up here basically taking the leftovers, right? These are the scraps left over there from the professionals that wanted to buy lower. Trap in those buyers and sell right into their stops. Once the market rolls over, we pretty much at that point know where we're trying to go. We're trying to go back into that range. We're trying to take out some of these lows here. And so that's where we're going to hurry up and find that new channel and then grab whichever entry pattern we can get off the high of that channel as we make our move back down, right, in the process going lower. I think probably the only thing we haven't talked about here as we go higher right now would be like a big move overnight. You know, we talked about if the market makes a big move down overnight, right? If it makes a big move down overnight, we wait for that pullback, we sell it back down to retest that low, right? Same thing goes here to long side. Now again, right, we're very bearish right now, so be very careful if the market runs up. Be aware of those crown reversals back down into that trading range. But if this thing pops up, you know, we get some headlines overnight talking about new stimulus. If the markets love what they're hearing and the market keeps on running and running and running, if we get one of those big moves overnight, remember, buyers will come in and they won't want to buy so high. So the goal is you want to look larger, right? Find some larger channels out here. Wait for that deeper pullback. Get underneath the moving average. Get those bears to come in and try to sell it. And once they try to sell it, right? Remember, all that momentum is going to want to retest the high, trap in those bears, right, and buy right into their stop losses. That's one of the easiest trades to take. It's a big move overnight. We're not going to chase it. find a larger channel, wait for the pullback, trap in. Again, trap in those bears. And I always tell you guys when somebody asks me, okay, how deep is deep enough? Right when it feels like it's turning bearish. So right when it begins to pull back and you're going, oh my goodness, it's a reversal. Hold on, probably not a reversal yet. Trap in those bears and run it back up to retest the high. How deep is deep enough? Usually right when you start thinking maybe it is a reversal after all. That should give us enough of a game plan for tomorrow. Obviously, I probably will. We probably missed something tonight though. I'll make sure we cover some of the blank spaces, some of the gaps tomorrow morning in our trade room because the markets have been pretty active here in the overnight. Let's finish up tonight on the crude oil. Crude, of course, is quite similar here to the S&P and the Nasdaq. We have 4 key insights. One, of course, being the bear bias overall. If I had a choice, if I didn't have a choice and I only had one trade tomorrow, might be better off being a seller, right? However, though, as you can see tonight, there's a lot of great buying opportunities as well, right? That strong move down for the bears suggests the bears want to retest that low. Once we get that retest of that low, do we break out and go lower? We talked about 3 breakout patterns, right? Mentioned that earlier in this video. Or do we see a reversal going higher? We talked about those 2 try failures going back up into that trading range. Really, really look forward to those. I love those little head fakes, those fake out breakouts, those bear traps as we go lower. Those could really be some of the best trades that we get across all 3 of these markets here for tomorrow. The third thing, of course, is that trading range. Ranges, of course, are very big clues. They're magnets. We want to buy low. We want to sell high. And again, like all the others here, we're very bearish right now. But it's a kind of a strange coincidence, though, how we're sitting right on some of these prior lows here right now with lots of support down below us here on the crude oil. So a lot of this, again, is going to be very, very similar here on the CL, right? So looking for that 1, 2, 3 breakdown. Mark that, right? Mark that low, mark that high, sell that first pullback. Where's the next big objective as the market takes off to the downside? Next big objective is at 83.65, 83.45. Those are the next big round numbers, next big objectives for the bears here. Watch out for that pop and grind as we go lower. Pop and grinds, same thing. Find that channel, grab those traps. Again, I won't bore you guys by repeating all this over again. Remember, first leg, third leg, very, very similar, right? Or maybe someone comes out overnight. The market dumps overnight, right? Big move down overnight. Nobody wants to chase after it. We wait for a deep pullback. How deep? Right about when you start thinking, ooh, maybe this is a reversal. That's right about when it's deep enough. Trapping those buyers who don't know how to read momentum and sell right into those stops for a run back down to retest the low. And then don't forget, once they retest the low, now look to trap in those bears again, right? 1, 2, use their stops as fuel, and we can blast it right back up again. Same idea we've talked about here throughout this video here tonight. Again, follow that direction, right? Strong move down. We'll look for that short. Once they retest that low, mission accomplished. And now, do we get some more bears coming in to the weekend? The inexperienced bears, do they get trapped now? And can we buy into those stop losses? Take out, right? Take out that high, go back up into that trading range. This could easily be a very good trade for tomorrow, right? Strong move down, sell it short, retest the low, pick it back up, use those stops as gasoline to run this thing back up into that trading range. As we go higher, right? As we go higher here, on the crude oil, do we pop up? Do we hold the pullback and jump off that moving average? If that's the case, find that channel and buy that first test. Again, first leg, third leg. I'm obviously going quickly through this here at this point, right? But that is the entry point right there, right? It's that 1, 2, 3 move going higher. We know at this point now the buyers have pretty much one thing on their mind: take out that 90.39, that 90 even level. I'm looking for trap, failure, pullback off the low of that channel. That's a pretty easy one there. Maybe it's a pop and grind. Maybe it pops and starts to grind and grind higher. These are very different than 1, 2, 3 breakouts. At this point now, we mark off that high, we mark off that big low, and you nailed it, right? Find that channel, get that first test off of that low. Right, remember, we may see it make a strong rip overnight. If it rips overnight, remember, find those big, no, not big, but find those bigger channels, get underneath the 21 moving average, trap in all those bears, because again, anytime we see a real strong move in one direction, there's a good chance we retest that high, trap in those bears. As they try to go back into that range, look for that retest of the high. And then from there, absolutely look for those buyers now to come in 1, 2, and sell back down into that trading range. I really like that sequence, right? Strong run up, buy the shallow pullback, buy the pullback to retest the high, and then rope in those bears. Because again, we do have an overall bear bias for that short going back down into that trading range. And again, as I said earlier, I'm sure the markets will throw some curveball at me here overnight. So if I miss anything along the way, I'll make sure we plug up any missing holes tomorrow morning in our trade room. Now we have the game plan. S&P's ready, Nasdaq's ready, Crude Oil's ready. We know the buy side, the sell side, and we know tomorrow there could be quite a bit of headlines coming out tomorrow between stimulus and Fed speak tomorrow. So bottom line, don't be late tomorrow morning. Our trade room opens up at 8 o'clock Eastern time. If you're looking for a great place to learn and trade along, there's no better place than with me every morning. We open up at 8 o'clock Eastern time. I would love to have you there trading right along with me. If you're missing too many good trades right now or you're taking too many losses, if you're new here for the first time today, I would definitely recommend take the free class first, learn the strategy first, get up to speed on that, and that way you'll be dialed in and ready to go for it, right, for us in our trade room as a brand new member. I'll put all the links you guys need in the description of this YouTube video. Don't be afraid to call the office. I'm always here if you guys have questions, and you can always use that live chat tool in the lower right-hand corner, and you can drop questions in the comment section below. How did I do tonight? How did I do? Do you guys agree with me? Disagree with me? Let me know in the comment section below. I'd love to know what you guys think of the video. I'd love to know if you disagree with any of my analysis tonight. Maybe you think I'm crazy. Maybe you think I'm right on the right track. I would love to hear from you in the comment section. While you're down there, hit that like button if you guys enjoy the content tonight. And as always, I appreciate you guys tuning in and subscribing to our YouTube channel. But that is enough for me tonight, guys. Hope you learned a bunch. Hope to see you tomorrow morning. We'll trade this stuff together, 8 o'clock Eastern time. I'm out of here. We'll see you guys tomorrow. As always, be well, be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.